To be clear, this is not a political statement. It's simply the facts about how tariffs will impact the real estate market. From lumber to drywall to appliances to finishings, much of what goes into a U.S. home comes from outside of the U.S. With the coming tariffs, Chinese goods will be taxed 20% higher, and Canada and Mexico will be taxed 25% higher. The new tariffs could increase builder costs anywhere from $7,500 to $10,000 per home, said Ron Dietz, chief economist of the National Association of Home Builders. Last year, the NAHB estimated that every $1,000 increase in the median price of a new home outprices roughly 106,000 potential buyers. Roughly a third of the lumber used in the U.S. home building comes from Canada, and the domestic lumber producers are expected to raise the price locally to match the imported supply. Paul Jink, the principal at Forest Economic Advisors, says we expect Canadian producers will stop shipping lumber to the U.S. Meanwhile, dealers who have been hesitant to buy given uncertainty about the tariffs will need to step up purchasing ahead of the coming building season. This will drive prices higher. So lumber futures were up 5% in the past week and are rising. The NAHB says any additional tariffs on lumber could further increase the cost of construction and discourage new development. And consumers end up paying for the tariffs in the form of higher home prices. As for ramping up domestic production immediately, that's easier said than done. Jink estimates it would take up to 3 years to build multiple new mills. In the short term, it is going to be very volatile from a pricing perspective, says Kyle Little, Chief Operating Officer at Melville, New York-based Sherwood Lumber. China is also the market leader in household appliances, so the tariffs will be passed along to the U.S., to us, in our new appliances. The majority of drywall or gypsum is imported from Spain, Mexico, and China. Rising costs due to the tariffs on imports will leave builders with few options. They can choose to pass higher costs along to the consumer, which will mean higher home prices, or to try to use less materials, which means smaller homes, said Danielle Hale, chief economist at Realtor.com. I don't see builders building smaller homes. We could see home buyers be less willing to buy new construction at higher prices and then start to create more demand for existing homes. That will push existing home prices up. We could also see people have a lower appetite for remodeling their current homes. That would either mean settling for what they have or looking for a new home. The Trump administration is touting lower mortgage interest rates in the past few weeks. The average rate on 30-year fixed hit its most recent high at 7.26% on January 13th. It is now down to about 6.64%. That's how real estate may be impacted by these tariffs. You may want to buy a home before new and existing home prices start to rise. Call me, Nathan Waldorf, to buy or sell a home at 423-544-7700.